Support and resistance. Support and resistance are most important price point or range on the chart of any security or stock. It is where maximum amount of buying and selling is expected. Okay? The logic behind is simply demand and supply. The price of any stock is driven by demand and supply. When demand is more than supply, that means buyers are more active than the sellers, the price increases. When supply is more than demand, that means sellers are more active than the buyers, the price decreases. We'll jump right into it. Okay, first we'll talk about support. Support, it's a level which the price is expected, not to fall any further. Simple. The demand is enough to hold the price from dropping further. Now, it can be in any form. It can be in the form of a single line, a price level, or a zone. So, it shows that in the past, this is the price level or the zone where the buyers happen to be more active than sellers, therefore creating more demand than the supply. So, probably it will happen again. उसी level पे या उसी zone में, ठीक है? To spot the support level, what you can do is look at the past price in the chart, try to find the extreme lows, okay, price point or zones where the price shifted in an upward direction. Okay, so basically find the pivot points where there has been a reversal in the price movement. Mark these points or zones and now connect them. Try for three or more such points. So that way you will get either a simple support line or a support zone. Now coming to resistance. Now it is again a level where price is expected not to rise any further. Simple. The supply is enough to hold the price from rising further. Now it can also be in a form of single line or a price level or a zone. It shows that in the past, this is the price level or zone where the sellers happen to be more active than the buyers, therefore creating more supply than demand. So probably it will happen again. To spot a resistance, you can do the same thing. Look at the past data in the chart. Try to find the extreme high price point or zones where the price shifted in the downward direction. Okay, basically again the pivot points where has been a reversal in the price movement. So mark these points on the chart. Now connect them. Try for three or more such points. So you will get either a single resistance line or a resistance zone. So support resistance are the reference point where there is high demand or supply in the chart. Okay. Along with candlestick patterns or chart patterns or volume for additional confirmation, you can make your trading decisions. Now support and resistance reversal, ये आपस में reverse भी हो जाते हैं. This is called the principle of polarity. In simple terms, a broken support level acts as a future resistance level. Similarly, a broken resistance level acts as a future support level. Now, support and resistance can also be directional, like rising support. When the stock moves in a higher high and higher low structure, then you can plot a trend line on the lower band of the pivot points. Then you can see there's a rising support line or zone in this structure. Similarly, there can be seen rising resistance, falling support, falling resistance. Now, also there's a concept of dynamic support and resistance. Now, when moving averages are used as support and resistance, then it becomes dynamic support and resistance because moving averages are derived from the price itself. So it will keep shifting or moving. Hence the dynamic nature of the support and resistance. Dynamic support happens to occur in an uptrend or dynamic resistance happen to occur in a downtrend. Commonly used moving averages are 20 and 50 for short term trading, 100 for medium term trading, and 200 day moving average for long term trading. Now, how moving average act as a support or resistance? See, when a stock is in uptrend, it trades above the moving average. It occasionally moves down to the moving average, takes support, and bounces back up again. Same is case with the moving average resistance. The price will trade below the MA moving average, occasionally moves up to the moving average, takes the resistance and falls back again. This is how dynamic nature of moving averages work as a support and resistance.